Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news that the US Fed has kept its policy rate unchanged again. But it did explicitly say it would look at whether it'll raise the target rate at its next meeting, and that seems a pretty clear signal to me. The New Zealand dollar fell sharply on the announcement. In a rare act of bipartisanship, the US Congress has overwhelmingly revived their Export-Import Bank, a shameless trade subsidy for their largest companies. Corporate threats to move some manufacturing offshore were influential. This deal came before the September trade balance for the US was announced, which came in much better than expected. Exports were up and imports were down. And China has confirmed new rules allowing the country's pension funds to buy in their stock market in 2016. The move is expected to unleash a potential inflow of about $500 billion, or about 30% of the pension fund's net assets. Yesterday's Australian inflation number, that's 2.2% on a weighted mean basis, along with the underlying economy that is facing strong headwinds, may well mean that workers there will be facing declining real wages. And that will contrast to a much better situation on this side of the ditch. Positive trans-Tasman migrant flows could well rise in 2016. In New York, the US Treasury 10-year yield benchmark rose today, now at 2.06%. Also gaining was the US benchmark oil price, which is now just under $46 a barrel, and the Brent benchmark is just under $49 a barrel. The gold price also jumped, now at $1,183 an ounce. New Zealand dollar starts today lower after the Fed announcement at 66.5 US cents, at 93.9 Aussie cents and 60.7 Euro cents. The TWI is at 71.9. Stay tuned for the 9 o'clock announcement of the RBNZ OCR review. We'll have full coverage, although no change is expected today. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.